All right, what the heck just happened to Baxter International? I mean, this is a humdrum medical supply company with a stock that just got poleaxed last week. Baxter is a textbook slow and steady grower, one of my faves, a company that makes everything from pre-filled syringes to IV delivery systems, infusion pumps, anesthetics, pharmacy compounding equipment, and kidney dialysis machines. It's not the kind of stock you expect to lose 10% of its value in a single session. Yet that's exactly what it did on Thursday before sinking another 2% on Friday. And I said to myself, I have got to find out what is happening with the stock of one of my favorite companies. For years, Baxter's been a safe haven in the healthcare sector. That's why I've been recommending it for ages. The stock's got a long-term record of outperforming the rest of the industry ever since it spun off Baxalta, its drug division, in 2015. Hey, we pushed that one aggressively, too. And then Baxalta promptly got bought by Shire for a 36% premium. Midas touch. So what went wrong? The worst possible thing that could go wrong, accounting issues. On Thursday, Baxter reported some solid preliminary results for the last quarter, but they also had some grim news. They told us they were launching an investigation into misstatements into previously reported non-operating income. The problem? Apparently there was something wrong with the way Baxter was calculating foreign exchange fluctuations in intra-company transactions. They were using an old standard that's not in keeping with generally accepted accounting principles. Basically, when Baxter moved money from one currency into another, which happens all the time, it was recording these transactions after the related exchange rates were already known. And that is a very big no-no. How much money are we talking about? Well, Baxter reported $113 million net foreign exchange gain in 2015, a $28 million gain in 2016, $50 million in 2017, $72 million last year, $22 million in the first half of this year. So that's not nothing. It's not a nothing burger. And it's kind of changed the story for me. Now, my normal rule of thumb, for those of you who know, and it's written in every single one of my books, accounting irregularities equals sell. I used to have it as a Post-it right on my machine, right on my computer. Why? Because when things go bad, when it turns out the scale of the problem was much larger than management originally thought, the damage to your stock can be devastating and even longer lasting. Most of the time, it doesn't play out this way, but it's rarely worth the risk of sticking around to find out. However, if anyone deserves the benefit of the doubt, it's Baxter. The company's been such a consistently strong performer in recent years, I am inclined at least to take a closer look at the situation. Even after the big sell-off, the stock has doubled since I recommended it in 2015 after that Baxalta spinoff, trouncing the 44% gain in the S&P 500 over the same period. So it's not easy to just leave a stock that you like. That's one of the lessons I'm teaching here. As for Baxter, the company, they reported a series of strong quarters. This is a nice, steady business, consistent track record of innovation. Earlier this year, they got FDA approval for a new blood clot inhibitor and a new insulin formulation that has a longer shelf life than its competitors. It will last for 30 days in room temperature or 2 years if refrigerated. I'm doing some work in this particular area myself, and I've got to tell you, that's phenomenal. Baxter also is working on a new dialysis system. And thanks to the diabetes epidemic, sadly, there's a lot of money in dialysis, especially in-home dialysis systems that make the whole process of filtering your blood less miserable. Management has been forecasting acceleration in sales growth over the next few years, and some major margin expansion is occurring. Until this accounting issue, they'd never given us much reason to doubt that they could hit these targets. In fact, the same day Baxter told us about the accounting problem, they also reported their preliminary results for the third quarter. The numbers were solid. While the company's sales came in a tiny bit light, up 5% on a constant currency basis, their operating income came in much higher than expected at $555 million. Wall Street was only looking for $488 million. Oh, it wasn't perfect, but boy, there's a ton to like here. Unfortunately, though, in my experience over many years of investing, as much as I may like a company, and you know I like these guys, no amount of positive earnings can offset the damage done by accounting irregularities, which is why the stock got clobbered. What do we do with Baxter now? Has it become too risky to own? Or should we use this pullback as a buying opportunity in an otherwise high-quality stock? First, it's important to get a handle on the scale of the problem. That's what you start with doing when you see these. According to Deutsche Bank, the accounting issue might be worth 7 cents a share going forward. In other words, they expect Baxter's earnings to take a 2.1% haircut. Not great, but with the stock already down more than 10%, it's already baked into the share price. The analysts at Deutsche are more worried that management wouldn't tell us whether they're allowed to keep buying back stock while the accounting irregularities are investigated. Still, they think the fundamentals are sound. The thesis is intact. All right, that's the bull case, sure. There's more uncertainty here, but business is good. How much can you hate a steady Eddie medical technology company with a 5% organic growth, very high, and 19.5% operating margins? I can see where they're coming from. But other firms were more negative, arguing you should stay on the sidelines until the dust settles, we get more clarity. As much as I like Baxter, I'm thinking that's where I come out because I'm just very conservative when it comes to accounting issues. Where am I? I got to tell you, I'm tempted to recommend Baxter here. The fundamentals are good. Their sales growth is actually accelerating. The secular tailwinds that have boosted this company for years, aging population and a rise in in-home dialysis treatment, remain intact. And after years of consistent execution, Baxter's earned some goodwill, especially since the accounting issue is unrelated to the company's actual operational results, which would be so horrible that I would just tell you sell. However, my discipline says it doesn't matter how much you like a company. When there are accounting irregularities, what you should do is step aside. And look, the numbers Baxter's discussing may be fairly small, but they remain material. Last year, the company recorded net foreign exchange gains of $73 million. That was about 10% of their net income. On top of that, the lack of detail on whether or not the company's allowed to keep buying back the shares, that did give me pause. Plus, Baxter's not perfect. Their medication delivery and clinical nutrition businesses came in weaker than expected, and at just over 20 times earnings, the stock isn't that cheap considering these issues. It is so complex when you see accounting issues, so complex. You want so much to say, let's just do it. But the bottom line here is Baxter's a high-quality company with a terrific track record. At the end of the day, though, accounting irregularities still equal sell, even if those irregularities don't seem like a huge deal at first glance. Now, look, eventually I think you can buy this one into weakness. We just aren't there yet. Either Baxter needs to come down some more, or we need to get more clarity on the situation. Until then, I'm urging you to stay on the sidelines or wait things out maybe in a cleaner medical device story, like an Abbott Labs, ABT, which is run by the great Miles White and has a multi-year record of excellent performance that will let you sleep a little more soundly. Yes, I am tempted. My rules say I can't. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.